We begin with our expert panel and 3 things investors ought to be thinking about right now. On the Barron's Roundtable, my colleagues Ben Levison, Andrew Berry, and Megan Lenhart. Great to see everyone. A good week. The big news is the Dow cracked 40,000 right at the close. Some real drama there because it was nip and tuck at the very end. So Ben, last week we asked you why the market was up. It was kind of a paucity of bad news. This year we have approximate cause. This week, I should say.
Yeah, this week we had bad news, but that was good news for the stock market. First, we had inflation. It came in weaker than expected. I guess that's good news, but it's also a sign of a weakening economy. And that was clear from a retail sales number that really came in below expectations. And that was really when you got your good news, or your bad news is good news reaction from the market.
You also had cooling overall, I think. You did see, things like the GDP number for the first quarter. You've seen jobs. This is actually a good sign for Fed officials who are looking for that lower consumer demand coming down and being able to control inflation a little bit better.
Yeah, I mean, it sort of is a Goldilocks situation right now. I know that's a cliche. I know it's a trope. I know it's a saw. But, right now, things are looking so good. I'm looking around to find some bad pockets. I mean, there's stories out there that everything is great. Everything you buy works. Gold works. Crypto works. Stocks work. Savings accounts are yielding great numbers. So, too good for you, Ben?
Well, I think that's the issue, is that the markets really do work on sentiment. And when sentiment gets too much in one direction, you want to start thinking about maybe going the other way. And I think a little bit of that is happening underneath the surface. When you're seeing things like utilities, they had a good week, not the best week, but they're still the best sector this month. They're doing fantastic. And that's a defensive sector. Staples are doing the same thing, another defensive sector. And I think there's a little bit of that defensiveness going on, even though some of that just has to do with falling bond yields.
Another big story this week, Megan, tariffs from the Biden administration. What's up with that?
Yes, so the Biden administration is raising tariffs on $18 billion worth of goods. And this is everything from, your aluminum, steel, which we've talked about before, but also semiconductors, medical supplies. I think the big issue here is actually the 100% tariffs that they announced on electric vehicles and 25% levied against EV batteries and the battery components. This also comes, remember, as we are trying to tamp down that inflation. So it is an interesting juxtaposition. Inflation is usually a component when you sit there and talk about tariffs. It can end up being a tax on consumers.
Well, this just highlights the inconsistency of the Biden administration's policies on green energy. I mean, they want to encourage adoption of electric vehicles, and here they are putting a 100% tariff on Chinese electric vehicles, which could really broaden the market. They've also been blocking on environmental grounds the development of copper and other mining projects, which are critical to the green energy. So it's just been, they've been talking out of both sides of their mouth.
Okay, it's an election year. I think, with these tariffs are certainly playing into some of that. But there's no doubt that the Chinese government is massively subsidizing manufacture of these vehicles. And while there are no Chinese branded cars for sale in the U.S. currently, so, maybe a little bit of a straw man, we have seen this really taking place in Europe. And so I think that there's a little bit of a get ahead of the situation before it becomes a situation scenario happening here. I mean, look, EU's investigating this. India, Brazil, they've hit the Chinese with tariffs. Right. This is something that is going around the world.
Somewhere Elon Musk is smiling, I'm sure. Want to shift gears a little bit, pun intended, and ask you, Andrew, about the great mystery of the week on Wall Street that concerned Warren Buffett. What about that?
Well, exactly. We got news this week about the so-called mystery stock that Berkshire Hathaway has been accumulating the last several quarters. They've requested confidentiality for at the end of last year. So basically, we finally found out what that stock is this week, and it turns out to have been Chubb. Berkshire has accumulated about a 6% stake in the big property casualty insurer. It's worth about $7 billion. It's interesting. Buffett has been selling a lot of stocks in the last year or so. In the last quarter, he was trimming Apple as well as getting out of HP and Paramount, but he loves Chubb. It's a business that he knows very well, and Berkshire's been involved in the P&C business for 50 or 60 years, and Chubb is probably the best run, most profitable, and leader in the P&C business right now.
All right, big question. will he buy the whole enchilada?
Yeah.
It's all the Chubb.
Yeah, I mean, that's the interesting question. I think he might like to buy it. It's certainly the elephant-sized acquisition that he has been seeking in vain for the last decade or so. Chubb's valued about $100 billion. Berkshire has about $200 billion or so of cash to play with. And I think it would be a good strategic fit for Berkshire. And I think it would also make some financial sense. Question is he interested and is Chubb a willing seller? Both companies wouldn't comment to us, but it's an intriguing possibility. You know, Buffett turns 94 in August, so he doesn't have a lot of time to pull off that big deal.
Yeah. All right. Great stuff, you guys.